Good morning, everybody. It's certainly, I think, more encouraging to see the number of unoccupied chairs have significantly reduced from the opening session. Yeah, it's in a minority, as Venu says, rather than a majority, as was earlier. So Hitesh's number of 400 seems to have increased now, and I'm certain we'll get the dynamic dashboard to tell us exactly how many people are there. It gives me great pleasure to be able to chair this panel. This panel is all about trying to understand for running a sustainable retail business. And when I say sustainable, what I'm meaning is something which can live from day to day, year to year, rather than merely being sustainable on the environment. How to run a sustainable business and how to plan different scenarios in running a sustainable business. And who better than this panel that I have, which comprises of companies who are both in the manufacturing space, companies which have built brands, companies which have built very, very admirable retail businesses. So they understand every single part of the supply chain, all the way from suppliers up to customers. So I thought what I'll do is I'll kind of dwell first on some of the key drivers that come to my mind about running a sustainable retail business. And when we think of a retail business, we know that it is what we call as operationally intensive, which means you can't take your eye off the business for a moment because there is something that can go wrong, and Murphy relives itself every day in a retail business. So that's something that we have to be very, very conscious about. And what I thought I'd do is just highlight some of the key drivers of running a sustainable retail business. The first that I thought of was customers. And there are several things that happen with customers that we have to be extremely conscious about as retailers. Their needs, their wants, the trends, the age segment which is actually buying, whether they live in a nuclear family, whether they live in a joint family, whether they live in rural India, as Ashwin was mentioning, where they can buy from a village heart, or whether they live in an urban market where they need to come to an air-conditioned store. So there are things that we need to be conscious about what's happening with customers, which can actually change the way we run our business. The second is competitors. And Ashwin also talked about this in his opening presentation, where he said how competitors can change the apple cart in a hurry. We all know about how the books business got changed dramatically when Amazon came into this category in the US. We know how the mobile telephony business got changed in India when online players came in. And like this, there are several ways in which competitors can change the nature of your business. The third is suppliers. And we often take suppliers for granted. We say that these are the SLAs that we have to define for them. And based on the SLAs, they are supposed to deliver. But what in case a supplier were to close down? What in case a raw material was not going to be available? What in case China declared a shutdown and your supplier was located in China? What in case there was a transport strike? Or if there was a shipping strike and you could not get products from your suppliers? So that's a third category. The fourth is in terms of technology. We take for granted several things. We take for granted that we can get onto the internet banking system. We take for granted that we can actually have our sites online all the time. We take for granted that the internet is always going to be available. We take for granted that let's say, for example, a data warehouse which stores all your customer details is going to be available. What in case these change? So that's another area that we need to think about. Financiers, the banks are there to give us money, but in one fell swoop, if the government tells you that retail is no longer a priority sector, retail isn't actually a priority sector at this point of time, but we're all under MSME, which is hopefully a more priority sector. What in case there were to be a change in terms of regulation, and at a national level in the banking system, if funds were to be tight and some regulation were to be passed saying that retailers can't access money the way they are able to do so today. What about the larger enabling ecosystem that all of us live in? You know, transportation. We all have just come out of COVID. We knew what COVID did to all of us in terms of us, our suppliers and our customers. We know about cyber security. We recently, saw how AIIMS in Delhi was crippled because of a cyber security attack. So, we all live in a world which is cloud technologies, data warehouses, mobile applications. We have to be very conscious of some of these things. Weather, we take the weather for granted. We're lucky we're not in Turkey at this point of time. We're lucky we're not suffering under, say, the impact of a volcano which suddenly erupts. But these are realities, not that we have volcanoes in India, but the reality of weather and changes around us is something that we have to be conscious about. Law and order, political interference, what you might define as strong arm tactics of the local gundas. These are things that we kind of believe will not happen to us, but if it does, it's an unexpected impact on our business. Regulatory changes, we've seen what FDI and domestic direct investment, carving out certain sectors for investment, carving out certain sectors for investing, being able to make a small change in what is called as the angel tax and create confusion in the entire system. There are ways in which businesses can get affected in terms of sustainable availability. And then, of course, last but not the least, I just thought I'll cover this, which is the entire emphasis on ESG, on building real-time sustainability into our businesses, of making sure that we adhere to certain, let's say, decarbonization levels which are required for industry, making us first measure it, report it, and then adhere to certain aggressive standards. The Prime Minister kind of went and made a statement stating that by 2050 we'll be net zero carbon. But we don't understand what even zero carbon is, forget net zero carbon, and we don't even in many cases measure what is the carbon footprint that we all create or leave. So, some of these can actually have significant implications on our business. So, these were just a few of the thoughts that came through my mind. I am not the expert on this in telling you what exactly are likely to happen. What we're hoping to do in this session is to be able to just hear the thoughts of some of the leading practitioners in the industry in this country to tell us about how they think about these aspects. And what I'd like to do is probably first with Ashwin, because he's got at 18,000 stores, you'll obviously have the largest number of suppliers in the system. And is there a way that you can tell us about, how do you identify risks with suppliers, and how do you look at mitigating these risks when you run a retail business? Hopefully it won't be a keynote speech.
Yeah. So I think from the supplier's point of view, our approach is always partnering with the suppliers. In being a large organization, obviously everybody looks at us very differently, but we respect all our suppliers, and there are large suppliers and small suppliers, and we try to ensure that their concerns and their priorities become our own in genuine spirit. And obviously the terms of trade is something which is at the beginning of the entire relationship, and we also have difficult times with certain vendors, and when we start particularly a new line, even for us the volume is not as big. And at that time, if there is established already a channel they have, then they have already engaged for their channels which are there, and they find it difficult to give us the merchandise share at that time. So these are some difficult situations which we face, and we work with them. And as I said in my speech, that it is the time now that even we can work, and we work with the brands to manufacture certain lines, certain products, which are, for us, and which really differentiate, which gives them an opportunity to try and test, and us a unique situation. So this is one area where we strengthen our relationship with the suppliers. And obviously one thing about Reliance is very clear, that we always make payment on time. So that is something which is very important, that once the goods receipt is really done as per a system, and it is very transparent. If there is a dispute on few items which have come damaged, defective, etc., immediately the intimation goes, and we make payment on time. That makes lot of peace for lot of vendors. So that is something which really helps us, do a better relationship. So really for us also, it's really an effort. It's not taking for granted just because you have the money, and to sell the product onwards is something which we have to do and make them win. So this is what, in short, I would say that we work with the suppliers.
Ashwin, just one more question, and I can certainly endorse what Ashwin says. I always say that in the Reliance system, it is more difficult to delay a payment than to make a payment on time. Because if you follow this system, your payment will come with a closing your eyes. But if there is a slight variation, you might spend a year to get your payment because you made a mistake in, either a QR code or a HSN code or something else like that. Just a quick one to dwell on the point you mentioned about partnership with suppliers. During COVID, when a lot of your suppliers were stuck, employees could not come, raw materials couldn't be sourced, how did you actually manage during that period of time?
Yeah, so it was a very unique situation in those times, and what really happened is that at that time, because of working with, of course, Reliance stores, which were the grocery stores, we could not even ourselves also do apparel, and because that was not permitted. But what was permitted to do business at that time, which was our grocery stores, continued throughout the COVID period. Not even one day we had shut any of our facility which could have worked, except very severe situation, that also alternate days and people stayed in. All that story is already behind us. But in terms of the question on the vendors, how did the vendors work? So vendors were very flexible. So at that time, my colleague Damodarji is not here, but he is the one who really orchestrated the entire thing in terms of, on one side, telling the customers that this is what is available, and convincing the customers, look, when you are looking for noodles, actually, because Maggie, everybody at home was trying to do something. So noodles, if it was that example of Maggie, it is going to come in this pack only, it is coming this one only. If I have Yippee at the moment, it is only Yippee which is coming. So I have no choice to give you what I have got. And customers were forgiving when we made the right communication. Even the combo packs, because it was not possible to reach to everybody, everything in their choice. So, so we made oil, some masalas, some salt, sugar, and dals and rice. That as a combo, which was of some priced at 999 rupees. And that is what, so rich and poor, everybody took that particular, combination and combo without asking any question, and some vegetables or whatever actually. So that was the way. Now, how did the suppliers do? So suppliers themselves also prioritized what were these items. They were not trying to say, okay, no, I have this, that. So whatever was first in stock was exhausted. Second, they were manufacturing in this manner that everybody could service every large population in a way, in a very, what you call, modular manner actually. So that was one change. And third thing was the deliveries. So we, at times what would happen, if our one DC has got a person affected, okay, then the entire DC is sealed for 8 days actually. That is what was the order of the day. Now when that happens, it was to supply to our larger stores, then we had to shift the supply location, okay. So either to our large store, and from there we were, moving it to our other places. So this flexibility was shown by all the vendors actually, okay. So these are 2-3 things which I can say which were really game changing and which really kept us in ability to do what was required actually. Other than that, all, rest of the things electronically exchange, all that was easier to do. But this changes in the mix of the merchandise and changes in the places of deliveries is two things which were really very important, which was done by everybody.
Great, thanks. Kulin, just a quick one, and because one of your pet passions is technology, this is largely about technology. What you're seeing now is various new technologies which are coming in, which are trying to replicate the experience you get in a physical store online. So if you think of, say, AR and VR, if you think of the metaverse, these are the kind of technologies creeping in, which have the potential to be able to displace the thought of a physical store itself. So how do you think about this when you look at your business, which is in the fashion space, and and people come there because they want to feel the garments, they want to see what they look like in garments, they want to check the fit, but this kind of thing which they need to come to a store for can actually be done online.
On technology, my experience so far has been that most times when new technology is coming into the market, the thought always is that it's inherently very disruptive, and that the growth of the technology comes at the expense of the existing business model. But so far, whatever I've seen of the omni-channel world is that each new technology comes as a layer which augments the overall business model. Now let's take, for example, e-commerce. We believed e-commerce would replace physical retail. We are now in a world where e-commerce is integrated into physical retail, whether it is the way, say, someone like a Reliance works with the Kiranas, or even the way our stores are today structured. All our inventory is live on all the e-commerce sites, the store inventory, and up to 15% of our store sales is coming from online deliveries. So, it's just an example of a technology which was perceived to be disruptive, but actually has made the business model stronger. And I think that in lifestyle categories like apparel, the store will always remain the temple of the brand, because you're selling aspiration, you're selling emotion. I think these technologies like AR, VR have the potential to even augment the store experience even further. So these are still, I think, at a very frontier level, these technologies. I think the metaverse is becoming relevant in the luxury side of things. I've not still seen an adoption on the more masstige or the more accessible price points. But I think looking at the way technology adoption curves have happened world over on various types of technologies, we should always remain very open-minded. And the day AR, VR or the metaverse becomes more relevant in the mainstream kind of business models, we should experiment, pilot, adopt, and quickly roll out. I think that adoption curve of technology has to be followed with milestones. But my guess would be that, again, I don't believe it will supplant physical retail. I think the combination of these technologies will make the experience better for the customers.
Yes. I completely agree with you. I think the opportunity for retailers to be able to, as I used to say, that when a lot of online retailers came into the market and we realized that these were all new kids in the block, had no history of retail, but were coming and competing with mainstream retailers. A lot of mainstream retailers at that point of time reflected on, if they can do it, why can't we? And many of them said that, okay, why don't we also do the same thing? But at that time, both understanding and appreciation of the role of technology plus the investments required in order to be able to adopt technology were very high. And but what you're seeing today is, with courtesy, as Ashwin mentioned about ONDC, looking at the way technology is geared in smaller packets, you don't have to pay for it up front, you pay for it on a monthly subscription basis. You can use it, integrates with whatever legacy systems you have. All that makes it much easier to be able to adopt pieces of technology which can help to augment, as you were clearly saying. Venu, this question is about decarbonizing the economy, the ESG agenda. We know that the government is looking at getting at least the top 1,000 listed companies to adopt the ESG agenda by next year and report it. That's more important. And to report, you need to first measure it. So otherwise, you won't be able to report it. And while in the West, this has become a requirement of sorts. In India, it hasn't been so far. And while it might be mandatorily imposed upon companies, we also have to figure out how to ensure that this goes back into our systems. So both in the way we set up and run our stores, the way we run our supply chains, the way we get our suppliers to be able to conform to some of these norms and to be able to measure it and figure out where the improvement areas are. So what do you think about this? Because one is to be imposed mandatorily on you by the government, and the other is what you're beginning to see, and certainly amongst younger consumers, this is now becoming a more important requirement for them in terms of where they want to buy and what they will buy.
I think in the West, and where it's obviously a lot ahead, it was driven by customers and consumers. And that was the starting point, and the government, retailers almost followed that. In India, I think the curve has been slightly different, and it has moved in starts and spurts. And plastic is a great example, where pretty much overnight the government banned the use of a certain thickness of plastic and so on and so forth, and everyone was forced to follow. Similarly, I think with ESG, and in a way, I think being led by the net zero commitment that has been made, and hence it's important for the country to make the progress. Customers and consumers are becoming aware, but in my view, it is still a very small niche. Now, for retailers, I think it's important to firstly identify, and there are a number of areas that you could be working on. I think the first thing is to focus and be clear for your company, your organization, what are the 2, 3, 4 things that you want to focus on, which will make a difference to your own business as well as to your customer. And first thing is to have that focus. The second, and while deciding that, ensuring that whatever you choose to do, whether it is recycling, whether it is products that are from sustainable sources, whether it is avoiding waste, or indeed to be carbon neutral. Now, any of these or all of these can be chosen. It's important to make sure that what you're doing adds to your business. The moment you say, I will fund it from internal resources, it will not work. It has to be finally net zero for your business as well. And from my own experience, sustainability actually pays back and helps improve the profits of your business, because the fundamental part is you're avoiding waste. And the moment you avoid waste, you reduce your cost. And because you reduce your cost, you improve your profits. It's just identifying which part you want to be and which will make a difference to your own business.
Maybe if you just share a few examples from your earlier experience with M&S, that might help, because they were a little ahead of the curve as far as.
And I think I'll give an example which is closer to India, not India specifically, but in Sri Lanka. And in Sri Lanka, a couple of the MAS and Brandix are the 2 large companies who were and are manufacturers for M&S, and were the first pretty much in the world to get into lean manufacturing and sustainable manufacturing. In fact, MAS had the first eco-friendly manufacturing unit anywhere in the world. Got featured in the United Nations, in Economist, and so on and so forth. And the benefit they got was the reduction in usage of fuel, reduction in usage of electricity, reduction in usage of water. Each of them between 40 to 60%, purely because of the way it was designed. And in the second year, it started paying back. And if I take the example of M&S itself, and in the first year in 2012, if I remember right, or 2010, when it was started, 2008, I think 2008 was when Plan A was first launched, and the initial investment was £100 million every year for 5 years. Over the next 1.5 years, it started paying back. And after £150 million, it didn't need further investment, because it started paying itself back, because of the fact that it was reducing waste, reducing energy, and hence the net profitability.
Great, thank you. What I'd like to do is just quickly switch to the audience and figure out what are the questions available, and then we'll come back again to the panel if we have time towards the end. If somebody can get a mic to this gentleman here.
I have a question on the point wherein we spoke about technology adoption, right? Sorry, I'm Ayushman, I'm the co-founder of Zeno. The question is basically it's easier to say when we are saying that whenever there is a new technology, we need to sort of adopt, pilot, experiment and see how it works. But whenever we have interacted with any large organization, right, the thought process of experiment is actually we are way away from experiment, wherein the cost of change and changing that focus in that ongoing hustle and fight is so much that there is very little room for experiments. And that sort of become a big challenge for any large organization to do those quick experiments and to adopt new things. So question for you guys is, how do you guys handle it internally? And how do you provide like a platform for other companies out there to do more innovation and experiments with larger organization like yours, wherein there is already a system defined, there is already a 5-year, 10-year roadmap defined. How do you bring that aspect in your day-to-day life?
I think I'll go first. I mean, at Chopper Stop, we have been early adopters pretty much for almost any technology you can think of. And equally, it's about having a mindset of adopt fast, test, trial, and if it doesn't work, move on. And I think that's clearly the way to go. The challenge I think that comes in for retailers, especially today, is just the plethora of options that's available. And with the increasing number of new ideas, startups that have come in, it's analyzing and shortlisting as to what would work for you. And then doing a pilot, doing it on a short scale with clear objectives and results so that you can work out for yourself, does it work, and then adopt and move on, or move to the next one.
You know, one of the things, just going on top of what Venu said, I think the critical thing is to ensure that the use case that you're solving for does not require a very complicated change management upfront. Large organizations are busy doing a few things that they do very well. If your technology requires a very complicated adoption curve, I think that reduces the ability. So I think the organizations which are more tech oriented are the ones which have done the basics. You have a different digital team, not the enterprise tech team. The digital team is business focused tech and not transaction focused tech. So that I'm assuming is hygiene. There are, I think, enough large corporates now which have the interface set up for startups. But I think the struggle will be when there are so many things you can do. How do you identify the few use cases which give the biggest bang for the buck without too much of a adoption curve risk? And I think, you know, I've myself built a SaaS startup, and it's very hard in India because the willingness to pay for technology which is a very fuzzy use case is low in India. You know, in other developed markets, people are much more open to spending larger percentage of revenue behind tech. In India, we are a margin constraint economy. So even when it comes to adopting tech, you need a hard prioritization, and you really need a bigger bang for the buck hurdle, I would say. So I think it is a tough thing to get adopted by big companies because of that reason.
In Reliance's case, normally what happens is that they will buy your technology.
No, it is not so simple as well. So what happens is we have GeoGen Next, which is our entire unit which looks at all the startups, and we have incubation program, and that is one side of it. The other part of it, your main question that, is it right, the organizations, what you asked. So the thing is that really the benefit comes from if you try something new. If it is already established, it comes with a very big cost actually. So at that time, to try for us, it becomes very difficult to really propose also. Because if it will not work, then you are already paying something. I mean, with due respect to all the IT companies here, but when you call some big IT company, the first thing will be a lot of people will come, and then there will be a lot of discussion on scope of work itself actually. Okay. So that itself is something which is slow and it will happen. So proven technology and proven situation, everybody has to buy. I mean, like when you are saying these payment situations, now it's a must. Everybody has to plug and play and start it. But what was the situation when likes of Innovity and Pine Labs started it a few years ago and they were going door to door? Who adopted them? Who were early adopters of the situation? That is really important. So both these organizations, I mean Innovity, just now we launched their digital rupee situation, and the launch of UPI in India was done by Reliance. So early adoption and early working is actually rewarding. Afterwards following is really of no use, really speaking. Everybody is doing, and if you don't do it, you are outdated actually. So technically, we believe in really starting early and really supporting actually as our organization. For different organizations which are not such a big scale, yes, I mean they can look at what is happening and really wait for the time when it becomes plug and play. So both approaches are important, and like chatbot, today everybody is requiring a chatbot and having a chatbot. We actually, as it was said, that we buy out. So we bought Haptic, which is the biggest in the chatbot situation. But all combinations have to be done, and it cannot be just, a closed situation. I mean, it's really important to keep a watch on everything and support even small startup. I mean, a small organization might support a startup and they can become really partners, and both will benefit out of it actually. So that's also possible.
Yeah. So that the larger thought here, the larger thought here, I think, is between a new technology and an existing user, there has to be a transition, because existing users are not normally willing to be able to adopt new technology for a core process and then find it falls flat. So in some cases what happens is that you have what are called labs, and these labs kind of work closely in terms of trying to see how to be able to induct new technology into a large company. So you might have a Walmart Labs or a Target Labs and those kind of companies. The other thing at RAI itself, because we are a body which represents retail, we feel that there is a great opportunity for us and many of our members, and we have a conference called ReTechCon, where a lot of the technology, new technologies are showcased. We ourselves have been thinking about how do we make sure that we create a lab kind of system between RAI, some of these new technology players, as well as some of the retailers. And it needn't be that it should work in Reliance or in Arvind. It can work with some, small regional retailer, because you're looking for POC more than anything else. So there are some ways in which we're trying to address this issue that you have mentioned.
I just want to say that anybody who wants to see the proof of it, go outside and see how many technology stalls RAI itself is promoting.
Yeah. Can we get another?
So, has anyone done a study as to which is more greener, online or offline? I know it's a very tough question.
I don't think either of them is greener than the other. They are both green, and the present and future of retail is omnichannel. And going back to, I think, what pretty much everyone said so far this morning, you have to be where your customer is, and today your customer expects you to be everywhere, and hence I don't think it's a choice whether you want to be offline or online. You have to be present across both.
Thank you.
One question to Mr. Ashwin. Can you disclose what part of your business is online versus offline?
I can only say that offline is more than online. Now, we don't look at really a percentage because we operate a hyper-local also, right? Large part of our, offering is omni-channel and hyper-local. So, really the same store is sweating, we call it sweating our asset. So, the same store is actually working to service to home deliveries also, and to the walk-in customers also. And to the extent that in groceries, JioMart is our online offering. So order may come online, but actually during the night it is picked up and it goes in the morning actually. Our subscription business is Milk Basket. Their entire night the picking happens in the store and it goes early in the morning. So really we see it as a very complementary, as the same inventory is being dipped by both the businesses. And whoever wins it at that geography is really using that inventory. So we have to give, as well said, there is no one answer actually. We have to give both the businesses the priority. If we don't do one, we are vacating the space for somebody else to do it actually. So it is a necessity to do online, offline, and also subscription piece, which is a hybrid of both online, offline. The customer would have come to you as an offline customer, but you are encouraging that once a month, please now shop from me only when you need next time actually. So it may not be approached by online, but you are converting a big basket part of it into subscription actually.
Brilliant, thank you so much.
Can we get a mic here to this gentleman in front?
This will be the last question before we close the session.
Thank you. I wondered, could you maybe explain somewhat around your branding strategies? I see many brands in different ways, in Shopper Stop, in Reliance, in Arvind. What is the thought behind that? How do they combine, how they bite each other, and what is acceptable in your views?
Hello. Yeah, so we are a portfolio of brand strategy, but when we look at our business, each brand has to have a unique strategy of its own. So in a sense, what we have tried to do in our business is we have tried to create a portfolio where, in a sense, every brand has a specific part of the market that it is serving. And the overlap between, the type of value proposition each brand has for the consumer, the overlap is minimized. So in a sense, the platform or the strength that the company has on the core services of building a brand, whether it is the way we do omni-channel selling, the way we manage the 3-4 different channels on which we sell, the way we manage the supply chain, those are capabilities which we make available to all of the brands in the portfolio. But each brand is run very independently by an independent team. So the brand CEO will own the brand without having a shared ownership with other brands, because we believe you really need to live the brand. So the functional horizontal services may be shared, but things like marketing, which is the storytelling of the brand, or the retail experience of the brand, or the way the product is designed, is very individual to each brand. So we run it like an independent business. So we are a matrix strategy where each brand is a business which gets plugged into a platform which it can take advantage of, and those platform capabilities are then available to each. I don't know if I've answered your question.
Good. We had one last question there. We'll just take that before we close the session. Somebody did raise a hand. Yeah, sure. Is the mic with you? Oh.
Hello, good morning, sir. I'm Ganji Manikanta from representing Ganji Venkana and Sons. We're a paint store from Hyderabad. My question particularly is to Ashwin sir. Sir was talking about sustainability and not discounting. And in our industry, discounting is very bad. Like the situation is horrible. There's no proper healthy practices going on. And I wanted to know how to survive. Like we can't afford to lose the customer, hence we discount. But how to sustain while not losing the customer at the same point?
So I think the first question to ask is, we are all, I mean, this we keep talking in, whenever we talk on the subject. See, first question we have to all answer is that we are in business. We are first in business. The rule of the business is you buy and then you sell at a price which is more than what you are buying. That is the profit, what you call actually. If we are not having a unit economics of profit itself, then what are you building? Okay. Finally, either you are building an asset or you are building something, I mean, loyalty of the customer. That is empirical evidence that customer is not loyal to anybody. Tomorrow somebody else will give discount, the customer will go to that particular organization or seller and they will forget you. And only everybody will read, acha ye to abhi ud gaya. I mean, that's what it is, the word which is used actually. And on that basis you cannot build business. So either you have to have a product which is, or an offering which is giving you a uniqueness which the customer is willing to pay, or really speaking, I mean, if you are just learned only by discounting, sales will come. As I said in my speech itself, the last portion, that don't buy sales. It is going to last very long till your investors are going to put in money, then they are going to demand performance from you. And the days are gone where you were really trying to discover customers and you are trying to do, some kind of database of customer will be valuable. That is not there now actually. So please build sustainable business, and there are all these people in the in this hall are all from retailers who are doing somewhat, business in a sustainable manner. The organizations are doing well, so all of them are here to take it to the next level. So I think the question itself, please look at it in this perspective, that loss cannot build a business is what I would leave it a thought. I mean, anybody else has a different.
There are several, examples even in India. So you have the entire offline mobile retail chains. Many have collapsed along the way because of aggressive price competition. You got to take a call at some stage whether it's better to keep your money and burn, or whether you take that money out, close the business, start something else, which is probably a better use of the money. So that's a decision which you have to take.
I think the core issue, as Ashwinji also said, is the lack of differentiation. So if I look at a brand lens, what we have decided to do is to double down on product and experience. And in our business, it means that whatever products we are developing for our brands, we are trying to upgrade the product. And one very interesting thing we have seen of late, last 12 months, is at least in the physical retail side, the more we have created differentiation in our product in terms of design or quality, the full price sell-throughs have been better. In fact, the higher price points are moving better than the commodity. So how do you decommoditize your business? And for a brand, that means upgrading product and experience. And I think for a retailer, it means enhancing service. There are so many regional retailers who have such a strong relationship with their customers that even though the same product is available in 5 different parts in 1 square kilometer, the customer will go to that particular retailer. So I think how do you get away from commoditization is the only answer to, excess discounting.
Thank you very much. I know we run a little ahead of schedule. We are about 20 minutes behind our scheduled plan, though we had started a bit late. Hopefully we can catch up so that it doesn't become stressful for the rest of the session. Thank you very much to my fellow panelists for that wonderful session that we've had, which kind of addressed some of these thoughts. A round of applause for them. Thank you.